BNN Bloomberg's Paul Bagnell joins me now for the day's business stories. Paul, how are the markets doing?
They're not doing well, Sean. As you've indicated to viewers, they were down at the open today. They have since tracked downwards since then. So we're very close to the lows of the day thus far. It's been a very volatile week. Volatility involves stocks going up on some days and then going down, usually going down more often than up. Markets did finish up yesterday, but they've lost all of those gains and then some today. And the concern, of course, in the marketplace is the stability of regional banks in the United States. What we are seeing today is bonds rallying significantly. So bond prices are up, bond yields are down. That's because there's a flight to the safety of government bonds. We're seeing the price of gold rise significantly. It's about $1,980 per ounce. It typically also plays a safe haven role during times of stock market volatility. But we're also seeing things like shares of Bitcoin and Ethereum, cryptocurrencies, also surge higher today. And that shows you how chaotic the current market circumstances are, because I don't think many market experts would call cryptocurrencies a safe haven.
Now, you mentioned the bailout of First Republic Bank, $30 billion being placed in its deposits. This was meant to shore up any concerns, but it doesn't look like the market is feeling any more reassured. What is your take on this bailout?
You know, when this was first announced, shares of First Republic surged. That was yesterday. We've then seen them come off. They're off as much as 23% so far today. This was a stock, when this week began, was worth $81.76 US per share. That was the Friday close on First Republic. Then Silicon Valley Bank blew up. The spotlight got cast upon this bank and some other regionals that the market believes may be on shaky ground. The stock is now trading at about $26. I think it's going to take a while for the market to decide whether or not it likes that bailout package that was announced late yesterday, and that is 11 major U.S. banks combining to put some $30 billion of deposits on the balance sheet of First Republic for at least 120 days in a move to allay concerns about its funding sources. Deposits are a crucial source of funding to banks as they do their day-to-day business, and to allay concerns about capital levels at banks, which are the way that banks can absorb an unusually high level of loan losses. The plan has received some high-level criticism. Bill Ackman, who's a well-known hedge fund operator in the United States, has made it clear he doesn't like the plan at all. He calls it spreading risk and bad policy. And one analyst, a Wall Street analyst who covers shares of First Republic, has cut his price target all the way down to $5 per share. So keep in mind, this was an $81 stock roughly on Friday. It's now a $26 stock. He thinks it's going to $5.
Wow, some very volatile times in the stock market and the banking industry in the United States. Thank you very much. That's BNN Bloomberg's Paul Bagnell. Thanks for joining us this morning.
Thank you.